This is Sam Bankman-Fried, and he discovered a method that allowed him to earn over $2 million every day. It started when he realized there is a massive price difference between two cryptocurrency exchanges. Coins such as Bitcoin were selling for up to 15% higher on Japanese exchanges than they were on American exchanges like Coinbase. Meaning, if he could just buy from one exchange and sell to the other, he would keep the difference on each trade. A trade worth $1 million would net him $150,000 in just an hour's work, and the more money he put in, the more he would make. But of course, such a simple trade didn't come without a string of obstacles. In late 2017, when this premium existed, cryptocurrency was truly becoming a global phenomenon for the first time since it was created. Even today, its infrastructure is still in its infancy. In 2017, it was almost non-existent. Banks were hesitant to deal with crypto, exchanges could not handle the rapid increase in usage, and it was extremely difficult to move large amounts of money between countries for these purposes. Sam had to quickly set up his own syndicate of banks and exchanges as the window to make money was small, and he only had a few months to profit off of this trade. Around this time, there was even more craze for Bitcoin in Japan than there was in the United States. It was the topic of every conversation and everyone wanted to buy some. So much so that the sellers and financial infrastructure could not keep up. With everyone wanting to buy and few sellers in the market, the price of Bitcoin shot up on Japanese exchanges, but not as much on American exchanges as the sellers could keep up with the increase in demand. If Bitcoin was selling for $10,000 on a US exchange, it was selling for over $11,000 on a Japanese exchange. If a trader had tens of millions of dollars to balance out these markets, they could make millions in profit every day. And this is exactly what Sam was thinking.
So it was, just giving ballparks, I think we're doing $10 million, $15 million a day of volume on it. And, the spreads were between 5 and 20%. Okay. So you can sort of do the math there. And it's a non-trivial amount of profit from that as a good trade.
After recognizing its potential, the first step was to organize the operation. Sam had to create exchange and bank accounts in both the US and Japan to move currencies around. But he was immediately stopped when banks began closing his accounts after seeing his initial test transfers of just a few $100s being sent to crypto exchanges. Banks were still skeptical about cryptocurrency during this time and wanted nothing to do with it, meaning Sam had a long road of convincing and negotiating ahead of him. Instead of trying to negotiate as a 25-year-old trading millions worth of crypto to a foreign country he didn't even live in, he created a trading company called Alameda Research, using his previous experience from his time working at a prestigious Wall Street trading firm. Although Alameda Research was created as a legitimate quantitative trading firm, part of its initial purpose was to facilitate this specific trade by making banks more comfortable in dealing with Sam and his team. A few weeks of meeting with banks later, he created and funded his accounts, and was now able to purchase Bitcoin in the US. All he had to do now was sell them on a Japanese exchange and collect the profits. It was simple in theory, but quickly became even more complicated when he realized he had to have a Japanese residency to set up bank accounts in Japan. He also needed to find a way to withdraw and transfer millions of dollars, instead of the few thousand he was limited to, or else he would only be making a few $100s on each trade. There was another layer to these challenges, as banks in Japan required him to be in a physical branch to send money, but he was operating out of California and did not speak Japanese. His only way around it was to hire a team of Japanese traders who would set up the accounts in person and transfer money back to the United States. By this point, Sam and his team were 2 months into this endeavor and had still not made any money.
We started to get a taste of it with some trades where we had limits, we had withdrawal limits, and we didn't have that much capital, but we're able to do them and able to clearly make money doing them, albeit not as nearly as much as we could have made if we'd had no withdrawal limits on the exchanges and an infinite capital pool.
Sam was beginning to realize that this operation was possible and could even be done on a huge scale, so he went all in. He raised capital from wherever he could, often at absurd interest rates, as this wasn't a very convincing scenario to lenders either. And he had even more convincing to do at the banks that had gone from suspicious to alarmed once they started seeing millions of dollars flow from a group of 20-year-olds every day. The team hired Japanese lawyers to essentially just talk to the bankers in a more credible and trustworthy manner. They translated the messages from the American team to provide more clarity on what they were doing, and the lawyers also confirmed the legality of the trade, making the banks more comfortable with what was going on. Sam had also negotiated with the banks and exchanges to pay whatever fees he had to in order to lift all transfer limits so that he could transfer tens of millions on a daily basis without any disruptions. Now, Alameda Research had a team of dozens and $15 million in capital. They were finally ready to execute as many cycles of this trade as they could. The trade initiated by the US team located in California wiring money to a US exchange and purchasing Bitcoin. From this moment, an hour-long timer began. When the banks opened in Japan, the California banks closed 1 hour later because of the time difference. And if the in-person traders didn't send the wire in time, there would be a delay on receiving their US funds. They could not afford to miss the wire deadline and be stuck with $1 billion yen in their bank accounts, as they could not do another trade without the millions of US dollars back. The time pressure was on, so the American team immediately sent the Bitcoin to the Japanese exchange, sold it for yen, and transferred it to the Japanese bank. Each of these transfers between banks and exchanges took time, and they still had to convert their yen back into US dollars, oftentimes with just less than half an hour before the wire cutoff. The fastest way to convert their yen was to go through the bank's online system, but it only allowed transactions of 100,000 US dollars at once, with the prompts and loading screens taking a few minutes each increment. Sam was trying to transfer 15 million US dollars a day, so every single person on the team logged into the website and converted $100,000 increments, able to process millions in a matter of minutes. Simultaneously, the team in Japan had been literally waiting at the bank counter during this entire hour, so that they would not lose their position in line when it was time to send the money out. On a daily basis, they were within minutes of the wire cutoff when the American team would call them after the yen had been converted and it was time to wire back US dollars to America. With almost seconds to spare, the final challenge was reading long, complicated reference numbers to the bank tellers, ensuring every number and letter was correct so that the wire could be sent out. But after nearly 3 months of effort and uncertainty, each trade was successful, and Sam and his team were making over $2 million a day at its peak, until the demand finally balanced out and the premiums disappeared a few weeks later. In total, it's likely that Sam and Alameda Research made over $20 million in just a few short weeks over the course of this trade. Alameda Research carried on as a successful trading firm, and Sam founded another wildly successful company shortly after called FTX. FTX is one of the largest cryptocurrency exchanges in the world and has been valued at over $30 billion, making Sam the youngest billionaire. But Sam Bankman-Fried has stated motives of effective altruism for building his wealth, and he already gives away millions of his personal earnings each year. Planning to give away the bulk of his wealth upon retiring, the efforts of him and his companies will likely have widespread positive impacts in the years to come.